Hey, it's Scott Cole here once again from bestdaytradingstocks.com and besttipsfortrading.com, and just wanted to give our stock market commentary for Monday, August 29th. Today was a good day for the bulls, as we were up well over 2% among all of the major averages. And as we can see here with the S&P 500, we closed above the previous high since the market made its low on August the 9th. We cleared the high set on August 17th and closed above that. So that is a bullish indication that, at least in the short term and maybe even in the intermediate term, we've put in a bottom, and we've formed this double bottom pattern, which isn't all that great shaped. I would have preferred that the second low actually would have penetrated the low seen on August 9th, but that didn't occur. That would give us a better, more confidence that this bottom will hold. But after we've had some confirming indicators here, we made this big up move on the 23rd. And today's market action confirms that move off of the low. So that suggests that at least in the intermediate term, we're going to probably be heading higher. Now, I'm still only very cautiously bullish here. And the reason is if you look down here at the bottom of the chart, today's volume was actually very low. And it was lower than what was seen on Friday, and that volume was kind of low. The other thing that I noticed today was, among the stocks that made the biggest gains in the 9 to 11% range, which was pretty much the best performers among the non-penny stocks, all of the big gainers were not, none of the big gainers, I should say, were among the leading stocks that have been leading this market higher. Yeah, sure, Apple was up a decent amount, and we'll look at that right now. So Apple was up a bit over 1.5%. And let's bring up Amazon. Amazon was up 3.5%. And Priceline was up about 3.5% as well. One thing I want to point out with Apple, though, today Apple was up on very low volume. It gapped higher and really did not move much off of that gap opening. Its price range was very tight, about 388 and change to 391.50, and it closed just a hair under 390. Now, if we see a day tomorrow where Apple actually gaps lower below 388 and stays down and then forms a bearish candle to the downside, then that's a very bearish pattern called the abandoned baby, as far as Japanese candlestick patterns are concerned. The last time we saw that kind of a pattern was basically right back here at the highs at the end of July. So let's keep our eye on the market tomorrow. I would be cautiously bullish here, but I'm less inclined to be all out bullish, just because the leading stocks could have acted a little bit better today, and the volume was light. The reason the market apparently went up today was some sort of a merger between two big banks over in Greece, and then we also had a report on personal spending here in the U.S. that beat expectations. Personal spending was up 0.8%, and the personal incomes were up 0.3%. I'm not sure that's a good thing. If you're spending more than what you're making, that doesn't make a whole lot of sense. So, but apparently people were spending a little money in July, and the market at this point is latching on to any kind of positive piece of news. So at this point, you got to say the direction of least resistance is probably to the upside, but be very careful here. Once again, somewhat cautiously bullish, but it wouldn't take much for me to get negative again. As far as day traders are concerned, we've had a couple up days here. So I would suspect that tomorrow is going to bring better shorting opportunities. And if you see a pattern like Apple, that might be a good shorting opportunity. So, you know, if you see any kind of a gap move down, or if you see significant weakness early in the session, don't be afraid to jump on board that trend. Okay, that's all we got for tonight.